Hey, good morning, John.
Morning.
How are you?
All right, good, thanks.
All right, we're talking about the big topic today. We want to welcome everybody who's tuning into this webinar, whether you're live. I don't know, we're a little earlier than usual, so I doubt there's too many people live here, but a lot of people are going to be watching this later. So thanks for checking this out. And I'm here with my main man. Oh, I forgot my title slide. There we go. Crypto taxes with my main man, John Singleton. So we did a class on this the other day. We're in the middle of a series, and this is part of our ultimate membership. I'm going to bring that up on the screen really quickly. If people go to, hold on, I'm pulling it up. There it is. If people go to privacyfightclub.com, they'll find access to this. In this class down here, Crypto Profit and Taxes, we're already into our second session on this. And we had a really good one. Part two was excellent. And we got into this idea that came up. Became a really big sort of thing in the crypto internet. I don't know, about a year ago, I would say, where the discussion became, if you're going to have cryptos at all and trade, say, between Litecoin and Bitcoin, or Litecoin and Ethereum, or Bitcoin and XRP, if you're going to place those trades, you have to report them somehow to the IRS and potentially pay taxes on them. And it had everybody just going crazy. I was getting messages from people saying, what do I do? I want to trade, but it's not worth the tax consequence.
Yeah, right.
And they were talking about trading on
Right.
they weren't even talking about like a Coinbase trade. They were talking about like Ether Delta trade that no one will ever know about. And then they'll be like, but the CIA knows. And it's like, yeah, but they
Yeah,
don't care.
right. That's right. They don't care.
So anyway, it became this big sort of legend of the crypto taxes. And then you came along and you just started, yelling from the rooftops. This is most of what you're hearing is just crazy talk. So we're not going to give people the full strategy today. That's for people who are members at privacyfightclub.com. But you do want to shed some light on this and explain this a little bit, give people some hope, and then we can point
Really?
them to resources where they can figure out what
Right.
to do when tax time comes.
Right. Right, exactly. Thanks. Yeah, and it's not like I just popped up and said, "Hey, everybody, I'm nobody. I'm
No,
not a CPA. I'm not an attorney, but guess what? You don't have to pay taxes on cryptos." It's not like that because
no.
cryptos, thankfully, you have to thank the IRS, cryptos are defined as property. So it's nothing different than the last 100 years of property rights. And I've been doing this since the 90s. We've had the same conversation I've had it with many people for 20 some years. And it was way back in the day in the 90s was talking about stock and the sale of real estate, commercial, residential, whatever. And to this day, now it's cryptographic currency. And nobody cared in the first 5 years, but now they do. And I'm here to tell you, and we even have a determination letter from the IRS itself agreeing that exchanges between coins are not taxable because,
Wow.
yeah, and it's because of the one reason, really, there is no disposition of assets. You can look that up. There's a publication, it's an IRS publication, 544, that talks about this and talks about fair market value and things like that. But because the IRS in 2014 defined cryptos as property, it falls in the category of every other type of property, pretty much. I mean, it's almost like the same type of property rights you would have with a copyright or a trademark because it's
Mm-hmm.
intangible.
Yeah.
And so there are no laws regarding new taxes on cryptographic currency. I know there was a lot of news on the 1031 exchange, but the 1031 exchange never applied to cryptos anyways. It
Wow.
always applied to real estate. Yeah.
Wow.
You could never do a like kind exchange with anything but real estate. So the IRS went and added the word real into the statute to make it real property.
Mm-hmm.
And everybody said, "Oh my God, look, it's new." No, it's
Yeah.
not.
Mm. Well,
That's not, yeah.
you kind of ran past something just now that struck me that we should pause on. You talked about this yesterday. You were doing the request for determination letter, helping people with that for a while, and yesterday, and I was involved with some of that. You said something that I hadn't heard you say, which is every single time that you sent the letter, essentially, the
Yeah.
IRS agreed
Yeah.
that the
Yeah.
Coinbase tax document wasn't applicable. It wasn't a
It was
taxable event.
it was a case where each and every case, there are about a dozen, And by the way, I did this way back in early 2000 something on other issues with the IRS. So I already knew how to do the procedure. So we just applied it for cryptos and made the legal argument.
Yeah, it's
And
the same stuff.
yeah,
Yeah.
yeah, same thing. And so we asked them, and the IRS is very cordial. I mean, in that sense, they'll say, yeah, they'll answer you. And this is Secretary's office. It's
Yeah.
not some revenue officer, right? And it's better than a letter ruling, really. But yeah, every single time we nailed it. I mean,
Wow.
the IRS just said, okay, so what we asked is, we told the IRS the 1099 we got in the personal account at Coinbase or Gemini or whatever it was, even the mining rigs that are paying us,
Mm.
in the cryptos, that does not constitute a disposition of assets. And by its own language, we had to use its own language, which is about backup withholding, which is kind of complex, and I talk about it in the video. We just basically told the IRS, I'm not going to include this 1099 in the 1040. And by the way, I already filed the 1040 and paid my taxes, but I'm not going to give you guys this 1099. And the IRS wrote back and said, that's fine. Just keep on doing what you're doing. In so many words.
Wow.
Yeah.
So you
Yeah.
got you're like the one who has the word from the IRS on this.
The
You
IRS
tested
said
it.
so. Yeah.
Yeah,
So
they
go
agreed.
look, talk to any CPA, look all over the internet, and you'll get scared, right? You got to file.
Terrified.
And yeah, and you
Scared
got to.
enough to hire them is what they're
Exactly,
basically giving you.
exactly. And they're going to have you run around, chase your tail, use all this different types of software to compile
Yep.
exchange reports. It's ridiculous. And the bottom line is there was no disposition of assets. And if you don't understand that, well, then you'll end up reporting, or you'll go to a CPA because that's, you trust them because they're professionals, and they're going to do the thing that they're trained and threatened to do.
You did something great on our episode yesterday, which was you gave a list of things to ask your CPA.
Yeah.
You said,
Yeah.
ask them if they know this, ask them this, ask them what they're going to do with that. And
Right.
I never, because that's the thing. It's like, okay, you're going to go to another person,
Right.
you know what you're talking about. They know what they're talking about, sort of, or they think they know what they're talking about. I don't know what I'm talking about. So now I'm going to them and saying, well, I heard on the internet.
Right, exactly.
And they don't know what to do. So you gave this great job interview for how to find somebody who would understand this stuff.
There's a list of questions you want to ask, and they're very good questions, I think. I mean, you don't have to take my word for it. In other words, if you ask those questions, you can make your own conclusion, and you can get your CPA. He'll give you, sometimes you got to pay him, but he'll give you like a little legal memo. And I've had many conversations with CPAs. Like, clients will say, please talk to my CPA. I can't have this conversation because, they don't have the language for it.
Yeah,
so I get them on the phone. We do a three-way. And 5 minutes into the conversation, the CPA is going, yeah, I guess you could do that. Oh, yeah, I guess that makes sense.
I guess you could save people hundreds of thousands of dollars.
But he's not going to change. He's still going to have people do it. But you're right. If you watch the video, that and among others, we'll do more. But basically, I gave you some specific questions. Like, for example, you ask, and you could do this in any country, by the way. You can, I wrote those questions so that you can figure this out in any country you're in. And so you don't have to say, hey, there's this guy in Florida that says this thing. And your CPA is going to say, don't waste my time.
Yeah. Mm-hmm.
But the other thing to keep in mind is you don't want to have a conversation about the asset itself with your accountant and ask his advice or something. Your accountant does a specific thing, accounting. He doesn't care about your investment in jet engines or real estate or net present value and all that stuff. He only cares about tax issues. So why would you ever have a conversation with him about the type of asset you're involved in? Of course, he's going to say, yeah, just let's report it, because that's his job. So
absolutely. And not to give too much away, there's a lot of complicated aspects to understanding this, understanding it in your understanding it in the sense that you understand it, you know how to act on it. Most people are never going to dig that deep into it. So we got to something yesterday. Essentially, you talked about how to avoid so much of the trouble that comes with this. And that really has to do with the big, and I'm not sure we even said this clearly on the show we did yesterday, but the big thing is the problem comes in when you're going from dollars to crypto and crypto to dollars for the most part.
Mm-hmm.
And for all of the things that you've helped people set up in the past, that's where the rubber really meets the road, is when you're dealing with Coinbase, buying crypto, moving it off of Coinbase, trading it on Coinbase. That's where you're really going to run into your problems. And for that, for the most part, you just want to do it as a structure and not as yourself, correct? Isn't that sort of the starting place?
Yeah, I think that's the way that I agree. I think that using a structure as an account holder instead of yourself personally, that avoids huge problems. Yeah.
And it mostly applies to the fiat side, right?
Absolutely. Yeah. When you buy an asset, it's not taxable. There's no tax consequence there.
Right.
There's
Exactly.
and you buy and you hold it. No one's gonna come knocking on the door and say, "Hey, we saw you buy this last year. We looked
Yeah.
at the blockchain," and nobody cares. You can buy whole. I don't care who buys, but it's when you sell, right? How do you dispose of the asset and turn it into
Exactly.
dollars?
Yeah.
And you can choose that. You have the ability to. You could do whatever, however you want.
Yeah, you
But
have some
yeah,
control over
yeah.
how
Because
that goes down.
let me give you an example. Let's say I just buy, and all of a sudden maybe I get rich and I have lots of money, and I just want to isolate $1 million worth of Bitcoin, and I don't have a structure. Maybe it's in my name.
Hmm.
So I take my $1 million worth of Bitcoin now. It's not in dollars, and I move it to a paper wallet, a Trezor, whatever,
Whatever.
just a cold storage wallet that I can hand to somebody, and then he can look at the numbers, the private keys, and he can then validate the amount of money in dollars that it's worth, right?
Hmm.
But it's still in Bitcoin. I can give that token or that wallet to an escrow agent. And the escrow agent, if it's the right one, not all of them do this, the escrow agent can source the dollars for that Bitcoin under escrow.
Mm.
So it's basically in a trust that you don't have anything to do with. It's a third party.
Wow.
Now remember, I'm talking about doing this without a structure and you're using Coinbase.
Yeah.
All right. So I take my Coinbase holdings in
Perilous.
Bitcoin. I put it into a cold storage wallet, a paper wallet even. I give it to my escrow agent. I've already made an offer on, let's say, some real estate. This is a great example. It's easy to explain. So I made an offer on real estate. The seller said, "Yeah, I accept your offer. We have a closing date." I take my Bitcoin, give it to my escrow agent. I open escrow with $1 million. And let's say I'm just going to pay cash for the property. It's just easy to talk about. So he's going to source, the escrow agent is going to source that $1 million. When the closing comes, that Bitcoin will have been disposed of under the escrow contract. It does
Mm.
not give me a tax liability still. Then when the closing happens, I'm going to acquire the property. Now, here's the key part. I can acquire the property in my name, which really defeats the whole purpose of going through escrow that way or however I did it. Because if I went from, it wasn't my Bitcoin, because that's how the IRS sees it. It's just, it wasn't my dollars, put it that way. It's Bitcoin. Who cares who owns it? But that Bitcoin was moved into an asset worth $1 million that I now own. So if I took title to the real estate, I would have income of $1 million.
Hmm.
That's easy to understand, but I don't have to do that. At the closing table, the day before, I could set up a company and I can walk into the closing and I can hold that title. I can close the deal in the company name completely.
Mm.
So I go from Bitcoin over here, that's not dollars. I don't have a tax situation. And I move it over to real estate, not in my name. I didn't get a gain. And now this thing, I've just funded another company. That's all I've done.
Yeah. Wow.
That's a simple version. Here's another thing to keep in mind. If you reduce the time period between when you buy the crypto and then dispose of it, like take it off the exchange, because you're getting onto the exchange because it's convenient. You can move lots of dollars there
Yeah.
typically, right? So if I just go onto Coinbase, for example, and then that moment or the next day I move it to a private wallet. Let's say I really like the BitFi and I like Atomic Wallet.
Mm.
I have Atomic Wallet on a dedicated computer on a laptop. So if I move it to my Atomic Wallet address the minute or the day of, now that time period between buy and sell or dispose of is a small period.
And
And
again, all you did was buy property and move it.
absolutely. And
Yeah.
again, there's no disposition of the asset.
Yeah.
So there's no tax consequence whatsoever. And even if I did 4,000 of those transactions and I moved it right from Coinbase immediately to my private wallet, and let's say it gets a 1099, that's easy to fix.
Hmm.
But now all that coin, that Bitcoin, cryptos, it's all in my private wallet and I can trade. I can use software to go from coin to coin and no one's going to report on me because I'm using software. I'm not
Right.
using a third party. So it's just, there are a couple things like that to keep in mind. You can avoid the tax situation. You actually have to go out of your way to create a tax liability.
Oh, yeah.
You have to
Exactly.
you have to file something. You have to compile numbers and then say, "Hey IRS, here, I'm saying under penalty of perjury, that's my tax." They're going to say, "Fine."
Great. All right, we'll
Yep.
take it. I mean, isn't that so much, John, of how people get in trouble with taxes is they're just constantly opening their mouths to the IRS and saying, "Look at this, look at that.
Right.
Hey, I got this thing over here. Do you guys want some money for it?"
They
Like
do.
people just go crazy. Like, "Oh, I better tell them about this."
Yeah.
And the funny thing is, you see these memes from libertarian types on Facebook. You're a fake libertarian when you have a Facebook account. So I'm a total fraud. So so you're on CIA book, or what do they call it? FBI book.
Yeah, right.
And you see these memes where people are saying, the meme was, tell the IRS, you guys already know what I owe in taxes. Why don't you just tell me? And they say, well, we want to see if you're going to be honest. That's sort of the meme, you know, that they're there to trap you. That's what people think, that they already know everything.
Well, I'll tell you the technical aspect of that. That's not really what they're doing. What they do, they need you to file a return under penalty of perjury because you're the one that makes the assessment. The IRS cannot make an assessment until you file a return.
Yeah. Yeah. Which that right there, grab a hold of that principle and it might change the way people do a lot of things.
Yeah. Think about that. If you realize what I just said, you should get angry. You should get angry.
Yeah. I can't, like, the number of times I've come back to you and said, you know, from a client or a personal experience and said, well, this person wants to file this, that, and the other thing. And you're like, no, you don't need to do any of that. Stop. You're just,
let me tell you,
opening yourself up to problems.
That's right. Like I talked to a guy yesterday and he was saying, because he had a 1099 issue with a debt collection. And I explained that it wasn't a tax situation because he didn't do a settlement. He didn't meet the criteria.
That's a very common one.
Yeah, and there are 2 letter rulings the IRS has that mean, in his case, most people, this is true. If you get a 1099 from a debt collector, it's not taxable.
Yeah.
But just because it's a 1099 doesn't mean you have to report it. So he understood, or his accountant understood, that the problem is his accountant asked the IRS to analyze the, it's called an exemption. And he filled out all these forms and documents, and it probably cost him $1,000 to do all this stuff. And file it with it. But I'm saying, you go to a tax professional and that's what they do. That's their bread and butter, right? Well, I'm talking to him and I said, well, you didn't really have to do all that. All you had to do is file your 1040 and it's automatic. They already know. But I said, you could do all that, but then you're going to have to give them some more documents. And then at the end of the conversation, he goes, oh yeah, I do. You're right. I have to do this other thing. And so they want to document everything. I said, yeah, exactly. Yeah. So you do get yourself in trouble, and just keep this in mind. Every time you file something under penalty of perjury, you create a liability for yourself. So file the least amount of things you can.
Well, that's a great place to end the discussion for today. All right, so listen, John, privacyfightclub.com. This is like, you know, I've known you for a few years, and I feel like privacyfightclub.com is like John Singleton on the internet. I mean, you've had great resources out there before. But I mean, here you're sort of putting it all together and saying, you know, let's put everything in one place. So we have our memberships. This one is skewed and it's driving me nuts right now. I'm going to fix that as soon as we get off. But we also have, so here's what comes with that. You get access to John's courses. So for example, in the base, you get your how to set up your LLC, learn how to do these basic things to set you up. And by the way, not just for cryptos, for people who have collection issues, if you've got defaulted debts, most people think those things go away. In our experience, they sue almost everyone for almost anything, whether it's $1,000 or $50,000. And you can learn how to protect yourself, simple ways, simple things that you can do so that you're able to use a bank account without fear. You're able to get paid without worrying about it being garnished. You're able to own property without having liens put against it. So simple. I mean, my goodness, for the basic, by the way, there's a coupon. So all these prices are actually half off if you use the coupon code. So just divide these by 2, and those are the prices right now if you use the coupon. And if you go to the ultimate class, we have our crypto profit and taxes and some future courses. We don't promise anything, but we are very excited about future courses. And so you're going to get what's here plus what's coming this year. So make sure you check that out. We also offer consultations with John, and everyone who joins at privacyfightclub.com gets access to our Slack chat where you can ask John questions. You can ask, people ask me questions, but I don't have anything to say. I always say, that's a great question. You should message John. That's literally, I welcome everybody when they come in the group. I say, hey, we're so glad you're here. Ask me anything. And then they ask me anything. And I say, that's awesome. Send a direct message to John. So people can see you laughing. They can't hear you laughing. So anyway, but that's a great part of the service. And then also, if you need further one-on-one consultation, we have that available for a very, very modest fee. So check that out, privacyfightclub.com. You really get a lot out of this. And the Crypto Profit and Taxes course is ongoing. We're doing a new one every Tuesday, and they're about to get very practical. So now's a good time to start watching those. Of course, the previous episodes have all been recorded, so you'll get those with your membership. All right.
Yeah. Now, remember, it's not just about the taxes, because that gets you started. What do you do with the windfall or whatever it is you're planning on receiving? And that's really the focus, because the tax is the least of your problems. You think it's the
Yeah.
big problem right now, but it's actually not. It's having $1 million in the bank and then not having a plan on what to do with it.
Excellent. And everybody out there is going, "Oh, I'd love to have that problem," but it is a problem.
It is. It's a big liability,
And
actually.
if
So
you're
yeah,
into cryptos now, that's a problem you just might have. You're an early adopter of
exactly.
cryptos. Some good things are going to happen. So, all right.
Yeah.
Thanks, everybody. Thanks so much, John.
Okay. Thank you.
Take care.